I hate intros, but if you watch the video from the beginning to the end, I got a few free things for you to understand the content better. So let's get to the point of the video about seller finance. Disclaimer: I am not a CPA, attorney, insurance contractor, lender, or financial advisor. The content in these videos shall not be construed as tax, legal, insurance, construction, engineering, health and safety, electrical, financial advice, or other, and may be outdated or inaccurate. It is your responsibility to verify all information yourself. This is a YouTube video for entertainment and educational purposes only. What is seller finance? Seller financing is a loan provided by the seller of a property or business to the purchaser. For example, imagine you really want to buy a cool video game console from your friend. Instead of giving them all the money up front, you ask if you can pay them a little bit each month until you've paid for the whole thing. That way you can enjoy the console right away and your friend gets the money over time. Seller financing works kind of like that, but with bigger things like investing in residual, commercial, and industrial real estate, as well as buying a car. When used in the context of residential real estate, it is also called bond for title or owner financing. Pros and cons of seller finance. Buyer's pros: faster closing. No waiting for the bank loan officer, underwriter, and legal department to process and approve the application. Cheaper closing. No bank fees or appraisal costs. Flexible down payment. No bank or government required minimums. Alternative for buyers who can't get financing. A good option for buyers who are not able to secure a mortgage. Buyer's cons. Higher interest. The interest you pay will likely be higher than you would pay to a bank. Needs seller approval. Even if a seller is game for owner financing, they might not want to be your lender. Due on sale clause. If the seller has a mortgage on the property, then their bank or lender can demand immediate payment of the debt in full as soon as the house is sold to you. That's because most mortgages have due on sale clauses, and if the lender isn't paid, then the bank can foreclose. To avoid this risk, make sure that the seller owns the house free and clear, or that the seller's lender agrees to owner financing. Balloon payments. With many owner financing arrangements, a large balloon payment becomes due after 5 or 10 years. If you can't secure financing by then, you could lose all the money you've paid so far plus the house. Seller's pros. Can sell as is. Potential to sell without making costly repairs that traditional lenders might require. A good investment. Potential to earn better rates on the money that you raised from selling your home than you would from investing the money elsewhere. Lump sum option. The promissory note can be sold to an investor, providing a lump sum payment right away. Retained title. If the buyer defaults, then you keep the down payment, any money that was paid in the house. Sell faster. Potential to sell and close faster, since buyers avoid the mortgage process. Seller's cons. Dodd-Frank Act. Under the Dodd-Frank Wall Street Reform and Consumer Protection Act, new rules were applied to owner financing. Balloon payments may not be an option, and you might need to involve a mortgage loan originator, depending on the number of properties that the seller finances under owner financing deals each year. Buyer default. The buyer could stop making payments at any time. If this happens and they don't just walk away, then you could end up going through the foreclosure process. Repair cost. If you do take back the property for whatever reason, then you might end up having to pay for repairs and maintenance, depending on how well the buyer took care of the property. What documents do you need to do and execute a seller finance deal? Standard purchasing and sale agreement. Contract a purchase and sale agreement, also called a sales and purchase agreement or a purchase and sales contract, is a legally binding document that parties in a transaction use to stipulate the terms and conditions that will guide the sale and transfer of goods or property. Promissory note, sometimes referred to as a note payable, is a legal instrument in which one party promises in writing to pay a determinate sum of money to the other, either at a fixed or determinable future time or on demand of the payee under specific terms and conditions. Deed of trust. This document gives the seller a lien on the property. Warranty deed. This document transfers the property to the buyer. You don't have to do this. You should hire a title company or an attorney to finish the closing period of the deal to transfer the title to you. How does the seller finance process work? This will be a simplified scenario because seller finance can encompass other finances with or without no money down to get the property or properties. Say, for example, a home buyer wants to purchase a historic home that doesn't qualify for a conventional mortgage due to its age and condition. The borrower offers to purchase the home for $80,000 with a $25,000 down payment, just over 30% of the purchase price. The seller agrees to finance the remaining $55,000 at an interest rate of 7% for a 5-year term and amortized over 20 years, resulting in a balloon payment of about $47,000 due at the end of 5 years. Over the course of the loan, the buyer makes monthly payments of $426 and is responsible for property tax and insurance payments. At closing, the buyer receives title to the home that is subject to a mortgage held by the seller. After 5 years of on-time monthly payments, the buyer makes the final balloon payment and the mortgage lien is released. Now you know what is seller finance, the pros and cons of seller finance, the documents, paperwork generally needed to do and execute a seller finance, and the process on how it works. Remember when I said at the beginning of the video, I promised you I have some free stuff for you. It's the paperwork templates of the documents you need to do a seller finance. They are located in the description of the video under the label Free Downloads. Make sure to subscribe to learn more about real estate and turn on the notification bell to be alerted to new videos. Make a comment on what I missed or what you enjoyed or experienced when doing seller finance in your real estate deals. Also, like the video if you enjoy or learn something new about seller finance and share this to your friends or family members. Also, make sure you are staying on your track to build wealth and have a blessed day.